Welcome to the ARE 5.0 video test prep series. In this video, we'll take an in-depth look at the Practice Management Division. This division focuses on the management of architectural practice, including professional ethics, fiduciary responsibilities, and the regulations governing the practice of architecture. An understanding of business structure, business development, and asset development and protection is fundamental to providing professional architectural services. You'll also explore issues related to pre-contract tasks, including negotiation, human resource management, and consultant development. You'll have 2 hours and 40 minutes to answer 65 questions in this division, which includes sections on business operations, finances, risks and developments of practice, practice-wide delivery of services, and practice methodologies. In the business operations section, you'll focus on the required elements of running a business, such as attention to staffing, regulations, insurance, ethics, and the appropriate standard of care. Let's look at a sample question. An architecture firm has been selected to design a 4-story apartment complex in a neighboring jurisdiction. The office staffing leader is in the process of assigning dedicated architecture staff to the project. Click on the name of the employee in the staff list who is most appropriate to be the project architect and responsible for the overall design and development of the apartment complex. Here is the correct response. The process for assigning staffing resources within an architecture firm is discussed in the Architect's Handbook of Professional Practice. First, you must evaluate staff on availability, experience, and credentials. You must also verify that the roles and responsibilities of the position align with the project requirements. Employee E is licensed in the project's jurisdiction, is only charging 25% of their time to firm projects, and has work experience on related project types. Based on the information provided, this makes employee E the most appropriate choice to serve as project architect for the new apartment complex. This is an AE level item requiring you to evaluate firm resources and determine staffing based on the requirements of a building project. In the Finances, Risk, and Development of Practice section, you'll explore the components of running and developing a practice, like attending to finances, mitigating risk and liability, and negotiating services and contracts. Let's look at a sample question. Refer to the exhibit. Office leadership at an AE firm is performing an evaluation of the efficiency of their office and overall effectiveness of each employee. What is the utilization rate of Architect A? Here is the correct response. According to the Architect's Guide to Small Firm Management and the Architect's Handbook of Professional Practice, utilization rate is a measure of the effective use of labor and is calculated by dividing an employee's direct labor by their total labor. First, you need to identify the direct labor hours for Architect A. Time spent on the Westside Community Center, City View Rehabilitation Clinic, and Parkside Apartments is all direct labor because it is charged to each project. Hours spent on responding to an RFP, firm staffing, and continuing education are considered indirect labor. By dividing the direct labor hours by the total hours, you determine that Architect A's utilization rate is 80%. Because the percent symbol is given next to the answer box, you know the correct answer should be represented as a percentage, not a decimal. This is an AE level item requiring you to analyze an employee's use within an architecture office to determine the effectiveness of their labor. In the practice-wide delivery of services section, you will focus on projects in the context of how they impact the overall running of a practice. Let's look at a sample question. An architecture firm has been awarded the following projects: a community center with a simple program, fixed budget, and the client's desire for contractor competition, a performing arts center with an aggressive schedule and the client's need to know a final construction cost during the design phase, the adaptive reuse of an existing industrial building which contains multiple unknown conditions into studio apartments. Drag the project names from the left into the boxes of the most appropriate delivery method for each project. Here is the correct response. Methods of project delivery and their characteristics are discussed in Professional Practice, a guide to turning designs into buildings, and the Architect's Handbook of Professional Practice. In the Design Bid Build methodology, project cost is a primary driver because contractors submit fixed price bids, allowing the owner to select a contractor at or under the owner's budget. This delivery method fulfills the community center's requirement of a fixed budget and contractor competition. In the Construction Manager as Constructor Delivery method, the constructor can provide technical advice early in the design process and a guaranteed maximum price, GMP, based on early design documents. They are also able to implement a fast-track schedule with multiple construction documentation packages, fulfilling the requirements of the Performing Arts Center. The construction manager as agent delivery method can provide the owner with early construction consulting, but does not provide a final construction cost during the design phase. Since the adaptive reuse project contains unknown conditions, a cost plus fixed fee delivery method will be the most appropriate because it disconnects the contractor's profit from any increase in project costs that may occur during construction. This is an AE level item because it requires the evaluation of different project goals and their alignment with various methods of delivery. In the Practice Methodologies section, you will analyze how a practice is structured to achieve its goals and how to coordinate various projects and services within a practice. Let's look at a sample question. Two architects are forming a new architectural design firm and need to choose a business entity. One architect anticipates bringing several existing clients, while the other architect is leaving a larger firm and is unable to bring clients. They will initially only conduct business in one state and have no plans to add additional employees. The architects would like to protect their personal assets and maximize their tax benefits. Which legal entities should the architects establish for their practice? Limited liability partnership, general partnership, sub-C corporation. Here is the correct response. According to Law for Architects, What You Need to Know, and the Architect's Handbook of Professional Practice, partners of a limited liability partnership are not personally liable for obligations of the LLP, but may be liable for their own personal negligence. LLPs are not required to pay federal taxes, as income and losses are reported on each individual's tax return. A general partnership provides no liability protection for personal assets. Although sub-C corporations protect stockholders' personal assets, both the corporation and stockholders pay federal taxes. This is an AE level item that requires you to compare and align goals of an architectural practice with business and legal structures. For more information about the Practice Management Division, refer to the ARE guidelines. Comments? Questions? Let us know. Be sure to check out the ARE 5.0 community for expert advice and tips from fellow candidates. And for more information about the content covered in each division and tips on navigating the exam interface, please watch our other ARE 5.0 test prep videos.